Hello, good afternoon. You're watching Your Stocks on CNBC TV 18. I'm Vinny Motiwala from the Mumbai News Studio. Let's look at the market quickly. Nothing exciting happening there. Nifty down 0.2% in trade. So yes, tried to make that recovery from the day's lowest point, but then has remained around the 24,150 levels. Broader markets, that's underperforming the benchmark indices. So Nifty mid and small cap both are down almost a percent in a trade even as of now. Nifty mid cap 0.9% of decline and small cap down 1.2% in trade. But this is a show where we'll be solving all your stock related queries. And today, to solve all your doubts, we do have our experts for today. The first one is Shaina Mukaddam, independent market expert, while we also have Vaishali Parekh joining in with us of Prabhudas Leeladhar. A very good afternoon to both of you all, and thank you so much for joining in with us on the show. Shaina, I want to just start with you and just ask about the market before we get to the queries. What are you looking at it in terms of the market? A bit of a subduedness again we've seen coming in the last couple of trading sessions.
Yeah, I think we're moving in a range, and if we are, unless we're able to, cross the 24,500, I think, and of course on the lower side, 23,800, I think we'll be range bound. There are a lot of things happening, which really we can't foretell how it will move. Like for example, you have Trump now coming into power, and we have tariffs that are really, we are not sure what sort of tariffs will come in for India, for China. Then we have China that is coming out with a stimulus package. So the impact on metals, large sectors on metals, on the interest rates the Fed has cut. So we don't know. While SBI has come out with good numbers, we really don't know what is the impact of all these global factors on large cap stocks. So to that extent, we have to move in a range, be selective, do not take any high leverage, and be invested for the longer term.
Okay, surely we will keep an eye out on that in terms of the markets. But let's get started with our queries. And we have Venu Gopal K, who's writing to us from Chennai. He holds 1,000 shares of Suzlon at a price of 80 rupees per share. Currently, stock is trading at around 63 rupees per share. Wants to know what he should be doing with Suzlon. In the last 1 month, we have seen a decline coming in. But before that, the stock has seen a good rally. Vaishali, what's your view on Suzlon?
Hi, very good afternoon, ladies. So yes, Suzlon has given a good run up. If I'm looking at the weekly chart, the long-term trend is still intact, and there's just a little bit of retracement. But when I'm seeing the daily chart, it has got into a corrective mode. So if market being volatile and some profit booking seen, this can go towards 58.60. So that is a level to watch. So I would say if he's holding for a longer term perspective, he can average out at 58, 55 levels. Or else I think for now he should exit.
Okay, long term then hold. Otherwise, you can look to exit. That's the word from Vaishali. But Shaina, what's your word on Suzlon? Long term, should the viewer continue to hold this?
Well, yeah, you can, but I would agree with Vaishali. At the current levels, a lot is factored into the price. If you look at valuations, it's almost about 50 times EV by EBITDA. So while they have huge orders on hand, while the sector is doing very well and likely to have good potential going forward, I think at least for the, like say maybe a year or so, it's likely to have a time-wise correction. So to that extent, I would exit.
Okay, let's move on to the next query. And we have Srijit, who's writing to us from Kerala, holding 500 shares of SAIL at a price of 134 rupees per share. SAIL reported their numbers yesterday as well. And so today also we're seeing a bit of a weakness coming in the stock. Wants to know whether you should continue to hold this or look to sell. Vaishali, what's your word?
So I think, SAIL has seen a very good beating. I mean, we have seen the recent high at around 150, 160 levels that we had seen some time back. And now it's corrected, and it recently made a low of around 110 levels. So I guess this selling has come because of the result. But, well, I would say not to be hasty. Continue holding because the stock is already in a very oversold zone. And, well, as again I said, short term, it is the trend is still weak. But for a positional trade, I think hold on. Once metal sector improves, you can see a bounce coming towards 140.
And Shaina, what's your word on SAIL? Because obviously numbers were a bit weak this time in terms of volumes also was a miss, realizations were under pressure. So does it make sense for the viewer to continue to hold this?
I think the numbers were really in line actually. Basically, even we saw in first quarter, this is a reflection on the overall weakness in steel prices that we've seen globally on a YOY basis, and it is reflected in the numbers. So it was expected. I would agree with Vaishali, and I think maybe we can hold, but hold with a stop loss, given the fact that, steel prices are remaining low. We do not know the impact of the stimulus that China is going to come up with, and valuations are very attractive. If you look at pure valuations, even at this sort of lower performance, you see price to book it is at 0.8. EV by EBITDA, it is just 7 times. So, while it is not too expensive at current levels, one needs to keep a stop loss. If it goes much lower, then yeah, you need to exit because we really don't know how steel prices will pan out over the medium to longer term.
Okay, let's move on to the next query. Vinod Agarwal is writing to us from New Delhi, holding 50 shares of Wari Renewable at a price of 2,035 rupees per share. So right now the stock is trading at 1,600 rupees, and obviously the viewer is making a loss on this. In the last 6 months also, we're seeing that the stock has seen a significant correction coming in, around down 43%. What is the prospect of the company, and should the viewer continue to hold this for a time period of 12 months if that's their holding period? Shaina, I'm going to come to you first on this.
I would say that the viewer is making losses and he needs to book his losses and move out. The stock has actually it has come off, but I don't see too much of potential to move up. Its parent Wari Energies had actually come up with a issue, and they raised to around $300 million to be invested. Of course, there was some offer for sale also in addition, but this $300 million was to be invested in some M&A activity, which actually would be, assisting whatever they buy will assist Wari Renewables to expand. But all this takes a lot of time, and at current numbers, the profits, revenue, on these bases, the valuations look extremely expensive. So if you're a holder for the next 1 odd year, I don't see too much upside from here. So I would switch.
Okay, not too much upside, right, for Wari Renewables from this level, and especially after the parent, coming out with its IPO as well. Vaishali, what are the technicals looking like for Wari Renewables?
Well, I hardly have any data, but with all the data that I have, I would say hold with a stop loss of 3,000. You're talking about Wari Renewables.
Renewables, yeah.
Yes. So I would say, I think continue holding with a stop loss of 1,600 levels, because there is a little bit of a corrective move coming in. So wait and watch.
Okay, wait and watch out there. But that's Wari Renewables that we were talking about. Let's move on. And Jeet Sethia, who's writing to us from New Delhi, holding shares of HCC, 180 shares, and it is at a price of 48.8 rupees per share. Wants to know whether you should continue to hold or look to sell this. Shaina?
I would say exit. Of course, the stock has given a good rally in the last couple of months. They have got good orders on hand, but I think everything is priced into the current levels. It's a very highly leveraged balance sheet. I don't know if the promoters will be in a position to actually fund all the growth that they need, all the finances they need, without diluting further in a big way. So I don't think valuations justify any major upside from here. So I would say exit.
Okay, valuations are not justifying any upside from here on. But on the charts and technicals, Vaishali, what is HCC looking like? Last YTD performance, when you're looking at it, the stock is already run up. So anything on the technicals maybe indicating a positive sign?
Is showing weakness. The recent high, what we saw at around 55, 56, and from there on it is continuously making lower top, lower bottom formation, and currently it's also below all the clusters of moving averages and also below the 200-day moving average. So I think this is showing some weakness. This can go down towards 35, 34 levels. The view gets negated or there is a sign of improvement only about 44, 45. So the person holding this should act accordingly. For now, it's an exit, but if he has to enter, do so above 40.
Okay. That's a view on HCC. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere, because after the break also, we'll be taking all your stock-related queries. So don't go anywhere. Welcome back. You're tuned into Your Stocks on CNBC TV 18, and we still have our experts with us, Shaina Mukaddam as well as Vaishali Parekh, to solve all your stock-related queries. Let's move on to the next query now. We have Hussain, who's writing to us from New Delhi. He's holding 200 shares of Reliance Industries at a price of 3,149 rupees per share. Stock, obviously, we're seeing some bit of a pressure, and the viewers making a loss right now. So, wants to know whether they should continue to hold or maybe look to sell this. Shaina?
He should continue to hold. Despite the volatility in the market,
Okay, I think we have lost your audio, Shaina, so we'll connect back with you. But Vaishali, what's your view on Reliance Industries?
I think this being such a heavyweight stock, it has given a good erosion right from 3,200. I mean, that was the previous rate. And now it is currently at 1,280. So the stock is in deep oversold zone. And even when I'm looking at the weekly chart, it is at a crucial support level. So I would say hold on, do not panic at this level. Let's wait it out because it can show a bounce once we see some stability in the market.
Okay, hold on, do not panic. That's a word coming in from Vaishali on Reliance Industries. Moving on to the next query, we have Sandeep, who's writing to us from Bangalore, who's holding 13 shares of Cartrade Tech at a price of 1,356 rupees per share. Wants to know whether he should continue to hold the stock for the long term or maybe book out of some of the losses that he's making as of now if it crosses his buy price. What is the view on this, Vaishali?
I would say actually this is one of the few stocks that is in a very good uptrend. So I would say continue holding with a trailing stop loss because now that I'm looking at, of course, in between whipsaws cannot be ruled out. So I would say now from here on, 1,050 should be the trailing stop loss level. But even when I'm looking at the weekly chart and all, I think we have a good upward trajectory coming towards 1,500. So I would say not in a hurry, but do hold this.
Okay. That's the word on Cartrade. Shaina, what is your view on Cartrade? Our viewer is holding the share at a price of 1,356 rupees per share. So for the long term, what would you suggest them to do with Cartrade?
yeah, I would suggest he can continue to hold at, say, maybe keep a stop loss of 1,200, but he should exit at a bounce. Because actually, while it is a unique platform for buying and selling of second-hand cars, I think the IPO was very aggressively priced in 2021, and post that stock has never seen those high levels. So I believe that and even valuations are expensive. So I would say that the investor can take any a bounce to exit because most of the stock is also held by PE investors and they will continuously come and sell at highs. So it is better to take an exit, switch to some other platform stock.
Okay, let's move on and talk about the next stock that is in focus, and we have a query on is PNC Infratech. We have our viewer Deepak Kishan, who's from Hyderabad, holding 20 shares of PNC Infratech at a price of 398 rupees per share. What's your long-term view on this? Hold or exit, Vaishali?
So I would say, well, again, this stock is also thoroughly beaten. So, well, right now it has taken a support. It's just hovering around that 200-day moving average. So now that it is held on for so long, continue holding, but keep a stop loss below 300. Because if 300 levels are broken, then this could trigger a further sell-off. So hold for now for a bounce back. And if it is showing it has an inherent strength, this can give a bounce up to 400. So stop loss 300, hold for target of 400.
Okay, stop loss 300, target of 400. Shaina, would you also suggest that we will continue to hold this?
Yeah, you can hold with a stop loss for about 300, and because the order book position is quite good. They have got about 20,000 crores of order on hand, and they continuously are getting orders in Maharashtra because from the Highways and Road Authority. And if you look at it, it's about 2.5 times their revenue. So they should continue to do decently well, and they're also looking to monetize some of their assets through InvITs. So all these things are positive, but these are longer term positives. So you keep a stop loss because in terms of valuations, while it is not expensive, if they're not able to execute the projects properly, and you see, in construction, you really cannot never say, then you may see a big downfall. So to that extent, keep a stop loss and keep a watch.
Okay, keep a stop loss of 300. Both our experts have said that. Long term, yes, they do have a good order book. Execution is going to be a key for PNC Infratech, keeping an eye on that one. Vishal Mohan is writing to us now from Chandigarh, who has an investment query, and he wants to know whether to buy Maruti Suzuki at the current levels, and wants to know what would be the perfect entry level for the long term. Vaishali?
So I would say auto index on the whole has seen a good erosion, and it's now sustaining a 200-day moving average. So likewise, even Maruti has seen a good beating. So well, exact bottom, it's very hard to tell, but these are good attractive levels to start accumulating. So I would say accumulate, because even if Maruti goes towards, in a worst scenario, around 10,800 to 11,000 levels, it's yet a buy.
Okay, long-term, good attractive buy. And on the fundamental, China, Maruti is a good bet, or maybe the viewer can look to buy some other company in the four-wheeler space.
Four-wheelers, Maruti looks decent, but buy it at declines as suggested. Basically, while the volumes may remain subdued, average realizations are improving with newer launches and better margins on the newer launches. So I would say you can buy it at dips and hold it for the longer term in your portfolio.
Okay. Let's move on to the next query. We have Ramesh, who's writing to us from Chennai. He's holding 2,000 shares of Indus Towers at a price of 300 rupees per share. Wants to know whether to hold or exit the stock. What is your view on this, Vaishali?
I would say exit for now, because the stock has seen a good change in trend. It is broken the 200-day moving average. So I would say, well, there can be a further sell-off. So depending on the time horizon, because, well, if there is further selling to this can drop towards 290. So depending whether you are a trader or for a long term, I would say if you are a trader, you should exit. But if you're a long-term holder, then, well, wait it out, because you're close to the support.
Okay, and Shaina, what's your view on Indus Towers?
I missed the Reliance question, so I would like to say it would be better to hold a Reliance as versus a Indus Towers. Valuations, while not expensive for Indus Towers, and I think FY24 was one of the best years for the company, and it has actually reflected in the stock also coming off post that. Whereas in Reliance, if you see, the stock has actually corrected, and at current valuations, despite the volatility, a large cap stock, I don't think it will correct more than 2-3%. And if you want to be in this segment, telecom segment, it's better to be in Jio, which is likely to, Reliance will come up. They're talking of, 2025, a possible listing of Jio. And there, I believe the valuations talked about are close to about $100 billion. So to that extent, I would believe it's better to be in Reliance versus an Indus Towers. So it's a switch.
Okay, switch from Indus Towers to Reliance. That's the word coming in there from Shaina for the query. But thank you so much, Shaina, as well as Vaishali, for joining in with us this afternoon on the show, solving all our viewers' stock-related queries. But quickly taking a look at the market, as of now, 24,130 levels is what the Nifty is trading at. So in the last 1 hour, it's remained in this range. Down 0.2% is what the Nifty is at. Nifty Bank down 0.7% in trade. 51,500 levels is what the Nifty Bank is at. Again, slipped a bit more in the last few minutes. We're seeing almost near the day's lowest point is what the Nifty Bank is trading at. Broader markets continue to underperform the benchmark indices. So keep an eye on that. But that's all the time that we have on this edition of Your Stocks on CNBC TV 18. Thank you so much for tuning in.